Welcome to Takeaways. My name is Jordan Brooks, Director of Market Analytics with ALN Apartment Data. And in this month's episode, we're going to be taking a look at the March ALN newsletter, which was titled Despite Volatility, 2025 Off to Strong Start. And the newsletter itself was kind of a wide-ranging look at the December through February period, so including a little bit of 2024, but just looking at the last 3 months across a variety of the usual multifamily metrics, so supply, demand, rent performance, concessions, all of that good stuff. And what I wanted to focus on today that really there wasn't space to fit into the newsletter in any real detail was sort of a regional look and pointing out some specific markets and sort of making a point about differences between markets of various sizes that we've seen over the last few months, particularly on the demand side of the equation. But starting first with supply, the newsletter went into some detail on the fact that we are already seeing a little bit of an ebb in new deliveries relative to the same period last year. And broadly speaking, 2024, it appears will be the peak for this delivery cycle in terms of new units delivered. Last year, we saw about 600,000 new units brought to market across the country. But I think an important context point is we're not talking about deliveries falling off a cliff in 2025. And I think that's important for people to really have in their mind reasonable expectations for multifamily this year. When we talk about deliveries slowing down in 2025, ALN is looking at in the neighborhood of 465,000 new units to be delivered this year. That is, again, a considerable decline from 600,000 units last year, but 465,000 units is still a huge number, and it puts the industry at the top end of the range for not only not only recent deliveries, but also historic deliveries. So new supply is going to continue to play a very prominent role in industry performance this year, despite the fact that we do expect to see a decline in total deliveries. With all of that said, part of the good news that we've seen over the last few months is that apartment demand, after a hiccup in January, we actually saw a step back that we mentioned earlier this year might be something to watch as a potential red flag for demand softening this year. Again, we're still very early in the year. Q1 is not even over yet, but February provided a nice bounce back there. And so if you take the last 3 months, again, December through February as a group, what we've seen from apartment demand is more of this steady, fairly slow, but nevertheless steady increase in apartment demand from the 2022 trough. And so below, though, the national number, where again, net absorption continues that steady upward climb, there were some interesting differences. So for example, primary markets and secondary markets were more of a lateral move if you compare the last 3 months to the same period a year ago, whereas tertiary markets and micro markets actually saw pretty substantial improvement in net absorption. So if you look at, if you kind of group markets by size, we've actually seen more positive action in the smaller markets so far this year than has been the case for those largest markets. Aside from that, just some specific markets to highlight. In terms of states, Ohio, Texas, and I would say to a little bit of a lesser degree, North Carolina have really sort of been the standouts recently. So for Ohio, you have Cincinnati, Dayton, Cleveland, Akron, and Columbus, all in the top 20 in terms of year-over-year improvement in net absorption. Again, comparing this last 3-month period to that 3-month period a year ago. So Ohio, sort of across the board, those larger markets in the state looking good in terms of improvement. Texas, same thing. So you have Dallas, Fort Worth, Houston, and San Antonio, all in the top 20 nationally for year-over-year improvement for this period in net absorption, as well as smaller markets in Texas like Beaumont and Lufkin that also were in the top 20 for improvement. And then North Carolina, obviously still some issues there with the recent storm, but Charlotte and Raleigh-Durham also both in the top 20 markets nationally for improving demand. So those are sort of the states that stood out. And then just a couple of other markets I wanted to point out in terms of just net absorbed units. So not size adjusted, not, improvement, just which markets are absorbing the most units in the last few months. Some interesting leaders. You got New York, number 1, Tampa, number 2, and Indianapolis, number 3. New York has been a little bit scattershot over the last few years in terms of a conventional multifamily demand. Tampa has actually been kind of a laggard in Florida. A lot of parts of Florida have been quite strong over the last couple of years. Orlando in particular and Central Florida has done quite well, but Tampa has lagged a bit. So interesting to see Tampa number 2 overall nationally over the last few months. And then Indianapolis, again, a market that's done well in recent years, but is generally not that high up in terms of national rankings for demand. So interesting there. And then also, I just wanted to point out at the bottom end of the top 10, Greenville-Spartanburg, a relatively small market in South Carolina, cracked the top 10 for absorption since December. And St. Louis, also, an area that is not generally a national leader in demand, is in the top 10 over the last few months. So just some interesting sort of market level notes there that really we just didn't get into the newsletter this month. And with that, I'll pivot to upcoming events that I'm doing that might be relevant to you. So the Arizona Multi-Housing Association, I'll be doing a market outlook webinar for them on April 10th. Also in mid-April, I'll be speaking at Resmania in San Antonio. And then May 8th, I'll be doing a market outlook webinar for the Apartment Association of Greater Los Angeles. Obviously, a lot to talk about there right now, given the recent wildfires and everything going on there. And that, I think, is it through May. So if any of those areas are relevant to you, check out our social media channels for registration details on those events. And also just in general for the content and announcements that we put out, look for ALN Apartment Data on your social media platform of choice. And be sure also to check out our blog, alndata.com/blog, for additional written content. And with that, we'll see you next month. Thank you.